Welcome back. Treasury yields largely tracking stocks today after declining on President Trump's positive COVID tests. But the 10-year is now just off the session highs it hit on stimulus hopes. We continue to fluctuate on all of these headlines out of Washington this afternoon. The larger question is how this uncertainty over the election in particular has any impact on the government's credit. Let's bring in Vikram Rai for more. He's managing director and head of municipal strategy over at Citi. Vikram, it's great to have you here. You know, we were a little shook by the news yesterday of Moody's downgrading New York City's credit rating. What else could be next, do you think?
Thank you, Kelly. It's my pleasure to be here. So, see, I want to be clear that we do not suborn gratuitous downgrades. And the last thing we want to do is co-opt rating agencies into downgrading credits which are already struggling with very large fiscal deficits. But my worry is that, there is an inconsistency in their methodology. So, for instance, in the past recessions, the number of downgrades, the notional amount of downgrades were far higher than what we have witnessed in this pandemic. And let's be clear that this is a once-in-a-century pandemic, so their inaction is surprising, right? And like I said, if they don't downgrade, the markets will be very happy. But if they downgrades towards the tail end of the year, if there's a cluster of downgrades, that is not good for investors. And again, I have tried to rationalize this inconsistency in the system. So one way to think of it is maybe they're expecting some kind of a political development. For instance, a large fiscal stimulus package, which could actually reverse some of the credit deterioration that we have witnessed. Or, and this is something that I've argued for a very long time, that maybe the ratings were too conservative in the beginning. And now, with the deterioration, they have come in parity with the other asset classes. Because municipal credit is stronger than other competing credits like corporate credit.
So, Vikram, let me ask you, because, again, what you're warning about is that we could see a raft of downgrades kind of towards the end of the year as the ratings firms catch up with these developments, unless there's a big COVID package and they don't feel that's necessary. But what would your advice be to investors then who say, well, I would like to avoid that kind of headline risk? Where should I be positioned? What would you say?
So Kelly, we are unquestionably bullish on the muni market. And the reasoning is very simple. And I have no compunction in saying that my outlook for credit, which is bearish, is completely at odds with my bullish forecast. And the reasoning, like I said, is simple because two reasons. See, firstly, the state and local governments are facing very large deficits. So how do they make up for that? Well, in one scenario, maybe there could be a very generous fiscal stimulus package. And if there is, after the election, if it's a Biden presidency with Democratic control of Congress, the fiscal aid package will be very generous. That's my expectation. And that could reverse some of the credit deterioration. But candidate Biden has made it very clear that he will raise taxes. And if he raises taxes, if the tax rates go up, that increases the value of municipals, which are tax exempt. So there are very few safe havens left. So if the tax rate goes up, the value of municipals will also go up, and that's why there'll be a steady rush of demand for municipals. Now, on the flip side, supposing it's not a Biden presidency and the status quo with President Trump getting reelected and a split Congress, the fiscal aid package may not be as generous, right? But still, then the state and local governments will be left to their own measures, and they will have to raise state and local government taxes. So one way or the other, taxes are going up, right? And if taxes go up, that increases the value of tax exempt. And see, there's something else which is also very interesting. I mean, you must have heard of ESG.
No, we got to go, Vikram.
And green bonds.
I hate to cut you off, but we're up against the end of the show. But I think your point about higher taxes making munis attractive in spite of everything is absolutely the right place to leave it. Vikram Rai, thank you, sir, for your time today.
Shepard Smith here. Thanks for watching CNBC on YouTube.